Hey everybody, welcome back to the channel. Today we're going to talk about these 6 things which I believe are the most overlooked business insurance needs that you probably have if you're a small business owner. I can't tell you the number of times that I have seen small businesses skimp out or just not consider the coverages that I'm going to talk about today because they're trying to save some expenses. Very understandable, but the amount of money that is lost by small businesses because of claims that surround the 6 ideas that we're going to talk about today, and hopefully highlight for you some of the reasons why I believe it's time to revisit many of these coverages. For those of you who don't know me, my name is Landon. I've been in the insurance business for over a decade, helping customers across the globe in over 60 countries with different insurance needs. And so today we're talking about the 6 most overlooked business insurance policies. So I would likely be wasting your time if I talked about things like liability insurance or property coverage, things like that. So let's kind of dig into an insurance 201 scenario where we kind of go a little bit deeper in understanding what some of your risks are as a small business, maybe what type of operation you run and what considerations you need to have and think about when it comes to basically putting up that financial defensive game plan. That's what I call insurance in general. You have a revenue model that makes you money, and insurance is the defensive model. If I'm playing football, I want to have a strong offense and strong defense. And so insurance is the defensive side, and we're going to talk about these different things today. So the very first thing I'm going to talk about is employment practices liability. This is often called EPLI insurance. So number 1, EPLI. So I will refer to it as EPLI insurance, but largely it is management CYA. What kind of mistakes have I potentially made with my employees, and could they sue me, and could they get any of my money because I've made some missteps along the way in hiring, firing, or maybe protecting them from certain elements? The very first example I'll give is when an employee has to be terminated by you and they believe that you wrongfully terminated them, whether it's discrimination issues or sexual harassment issues or just whatever the case may be. They feel like, hey, I should not have been fired because I was performing my duties, I was doing what I was supposed to do, I was never corrected, and therefore I'm gonna hire an attorney and try to go after my former employer because they have destroyed my income and my life and my lifestyle, and that's sort of the basics of what employment practices liability will help you defend against. Now, the other piece of it that is very important is something called third-party liability. Let's make sure we understand third-party liability. Your typical insurance policy is 2-party. The insurance company will protect you against things that you do wrong or things where you have negligence. That's the official term in the insurance world. But on third-party liability, there brings in someone else that's associated with your organization, your company, but isn't directly under your control or your supervision. Something like, let's say you're a restaurant and you receive food and other things from different vendors. There's a guy that drives a truck in every other day and he drops off some paper products for you. Well, in doing that, the person that's receiving that, who is an employee of yours, they go out to the loading dock and they say, all right, give me the cups, the napkins, the paper plates, whatever it is you have to have. And that person, gives them a wink, wink, a nod, nod, and they are harassing them. If that employee turns around and says to you, hey, so-and-so is harassing me every time they deliver goods to us, and you do nothing about that, or you don't try to find ways to protect that employee, you could be found negligent. And that is something called third-party liability. So when you're purchasing employment practices liability insurance, make sure it has third-party liability protection. Now, in general, how much does this stuff cost? Well, many insurance policies have an endorsable form that you can add to the policy to basically cover you on a small scale. Those additional endorsements are not all that expensive. I would say they range in the several hundred to maybe 1,000-ish, depending on one important factor, and that is the number of employees that you have. The number of employees that you have is a direct relationship with how much employment practices liability will cost you. Again, make sure that endorsement has third-party liability. If it doesn't, go out to your insurance agent and say, hey, I need an employment practices liability policy that is covering third-party liability. And if you do all that, I think you'll be in good shape and you have not then overlooked employment practices. So, number 2 would be workers' compensation. Now, Landon, why in the world are you talking about workers' compensation? I mean, workers' comp is a very standard and understood coverage in the insurance world. Yes, it is. However, too many of you believe a couple of different fallacies that can really come to bite you. And that is, number 1, a myth, I am not required to have workers' compensation. That is almost always flat out wrong. Yes, it varies state by state. And if you have questions about your specific state and the laws that go along with your state, drop me a comment anywhere that you see this video and I will send you the state laws that pertain to you and how you need to handle workers' compensation coverage. Because oftentimes, if you're a sole proprietor, per the state regulation. So it's very important to understand what your state laws actually say. Now, where you can also get in trouble with workers' compensation is when you believe you have just a 1099 employee. You are paying someone on a 1099 form, which is basically saying you are subcontracting work to them. Now, the state's idea of what a contracted worker is very different sometimes from what an insurance company's idea of a contracted worker is. Basically, if the person that you are paying on a 1099 only works for you primarily and only relies on you for work, then that person really is considered an employee by the insurance industry because you have the ability to affect where they are, where they're working, and what risks and exposures you're putting them into in the job. Let's go to an example. A contractor, for instance. This often happens in the contracting world where a contractor is told, maybe they're a painter, and you have to show up at this job site and paint on this house. Great. So you do that. However, you only work for one person. You only work for one man, one woman, and you then are captive to them. You only work really for them. In the insurance industry's eyes, they are truly an employee of the company, okay? So you have to make sure you understand how all that works. Now, how do you get around that, or how do you need to make sure you handle that correctly? Oftentimes, if they are 1099, you still have to make sure that that 1099 employee or worker has their own workers' compensation insurance. If not, at audit, you will get hit with a large amount of money that is due to the insurance company itself. Now, what if you continue to overlook this? Landon, this isn't a major deal. I've gotten away with this forever and ever and ever. I'm here to tell you that state by state, they are increasing the number of investigators that are going out after small businesses and comparing tax returns and filings with what it is that you have on the books for workers' compensation. If you don't have the right workers' compensation policy set up, they can fine you at hundreds and hundreds and hundreds of dollars per employee per day until you come back into regulation. And state by state, they are enforcing this more and more and more. I have had countless I've had countless customers that have had these nasty letters and investigators literally knocking on their door to get workers' compensation taken care of the correct way. Finally, workers' comp also needs to be handled the right way from the beginning. If you are a sole proprietor or a company that has a very small number of employees, you as the owner want to make sure that primarily you are excluding yourself from coverage. Now, why do I say that? Why would I want someone to be excluded from an insurance policy? Well, when it comes to what you do, the workers' compensation policy is owned by you. And going back to what does an actual policy in workers' comp cover, it's injuries on the job. So if we're playing at home, you are the owner of the company and you buy a policy to protect your workers. Let's say you get hurt. Well, Well, would you want to file a claim against yourself? No. You have medical insurance, I hope, that would cover any injuries that you sustain on the job. And so you want to make sure that your insurance agent excludes you from coverage on workers' comp. Because if they don't, any net income, any profit that you pull from the company as the owner would then be auditable. It can be audited by the insurance company and added to the policy, and you end up having to foot the bill for that. So that could be a big number. So get this right at the outset. Workers' compensation, hyper important. All right, number 3, it's a topic that we hear more and more of every day, and that is cyber liability insurance. So cyber liability insurance is a big deal. Many of you believe, and this is why it's in the overlooked category, that you don't need it. That I don't keep customer data, I don't have a lot of computer needs or knowledge. And let me just tell you, everything is connected to computers these days. And even though you believe you may not be able to be shut down because of a cyber incident, what happens if something or a software program or someone you rely on gets shut down because of a cyber incident? How does that affect you and your ability to earn an income? So again, cyber liability insurance is very complicated. It's sort of the wild, wild west of insurance because there are many different carriers that offer many different coverages within it. And so understanding what it is that you're actually protecting against or purchasing to protect against can be a difficult task. So I definitely recommend that you do a lot of research when it comes to cyber liability insurance. Landon, I don't want to. I'm telling you, you need to, okay? If there's one strong suggestion I can make with this video, if you've made it all the way through to this point, that I would suggest you go out and research what cyber liability insurance would actually cost you as a company. According to many different entities that I've seen report on these type of statistics, 43% of all cyber liability incidents in this country happen at the small business level. That is under 100 employees. So I've heard countless times, I don't have a lot of information, or my security is super tight. I've got firewalls and all this stuff. No one's gonna get into my stuff. Right. Well, a lot of large corporations, multi-billion dollar traded on Wall Street companies get hacked every single day and are charged with billions of dollars because they have to basically go out and each customer that they've got information on that was hacked or was compromised, they have to go out and fix that problem. So I'm here to tell you that this is a major deal. It's only becoming a bigger and bigger deal in the insurance space. Now, cyber liability can be purchased in basically 2 main ways. One, you can endorse it on your current package. Yes, that's helpful. Usually those endorsements for cyber liability are very limited. It is not very broad. In the insurance world, we want broad coverage. We want multiple things that could possibly happen to us to be coverable. And that doesn't always happen in endorsable cyber liability insurance policies. Now, you may want to start with an endorsable cyber liability insurance policy or form because that at least puts your toe in the water. You can get started understanding what cyber liability is actually protecting you against. Great. As soon as you start to understand it and you actually dig into it and you read some publications and industry news that other people in your industry have had cyber incidents, because newsflash, every industry has had cyber liability incidents. So you need to make sure that you have this understanding and then go out and actually research what a standalone, by itself, separate cyber liability insurance policy would give you. That would be the second way that you can buy or find cyber liability insurance, is in a separate policy. These limits usually match the liability limits that you have for your company and would protect you against, again, that third party issue, or I'm not able to earn income because a cyber incident has shut me down or shut down a vendor I use or shut down something I rely on. So cyber liability, super important, often overlooked. Go research it. So I feel like I'm getting better at segues here. So we talked about business having problems earning money because someone has shut you down or something you didn't do shut you down. So number 4 is actually business income coverage. And again, many of you are probably saying to yourself, Landon, I get all that. I have that. Business income is part of my normal package. package? Yes, you probably do. However, it doesn't always extend to the things that are excluded in your policy. So, as you know, and one of the things that the insurance industry gets a lot of hits about is that we don't always cover everything. In fact, we're really good at putting legal contracts together that would suggest that we're trying to get out of paying some of these high-end claims. Yes, I own that. I'm an agent. It just is what it is. I don't actually set the rates. I don't set these policies up. However, if I'm trying to guide my clients to figuring out how to best protect themselves, business income coverage is always a topic of conversation. The first thing you are looking for with business income coverage is something called ALS, and that stands for actual loss sustained. In the course of a policy, it usually lasts 12 months. You are earning income. You are earning money during that policy period. What you want is the actual amount of money that you would not be able to have made be able to be given back to you through the business income coverage. And so that's why actual loss sustained is important. It can be written on smaller levels, which basically would suggest that you are getting smaller amounts of coverage for smaller incidents, which that can help, but it's often not enough. ALS, actual loss sustained, is not an expensive endorsement. It just has to be added to your policy. And oftentimes we do overlook that portion of the policy. Now, a couple of very important things. There's usually a waiting period. You want to pay attention to how long you have to be down and out before you can recover revenue. Sometimes that's 24 hours, sometimes that's 48, sometimes that's 12, sometimes it's immediate. But understand how the policy responds. The second thing is it has to be usually triggered by a property loss, a loss to your property. Read the fine print here, because if you have a power outage, if you have a communication mishap, if you have something that's happening to you that you can't control, sometimes the policies will actually extend business income coverage for that. You're going to hear a lot about business income coverage as well in all the other different areas that you're overlooking potentially, because business income can be added to many different coverable areas in an insurance policy. All right, so number 5 on our most overlooked insurance, business insurance policies is going to be flood and earthquake. Now, I'm bringing this up because these are the two most often excluded property coverages that you have. And we've talked a lot about flood insurance and a little bit about earthquake insurance, again, depending on where you are. But understand that the standard business insurance policy does not cover flood nor earthquake insurance. So we need to make sure that we go out and try to find that. Again, you can sometimes endorse that. This has been kind of a theme. Can you just add it to the policy you have? Maybe. More likely though, you have to go out and buy a separate policy for these types of coverages. Now, let's talk about flood insurance just for a minute. The most common way, or sometimes the most economical way, to purchase flood insurance is through the National Flood Insurance Program. This is a program run by our government, so take that for what it's worth. However, for businesses, there is a $500,000 limit on property damage and property coverage for the building that you own and the contents of the business that are within that building. So if you lease a building, then you really only have to worry about the contents of your business. So like your tables, your chairs, your fixtures, your equipment, your computers, anything that you have inside the business. Now, flood insurance, it varies all the time. The National Flood Insurance Program does not right now, at the time of this recording, have a full-blown way to cover that business income coverage that we talked about before. So you need to look at the private insurance market to find the extension of coverage for business income. So business income, if you're still watching all this and you understand that business income is a big deal, you want to make sure that that's part of every trigger possible in the policy. Flood insurance, you probably need to go search the private markets to find business income coverage for flood. If you're in an earthquake-prone area, you will need to engage your insurance agent to see what options are available, as that is a very specific sort of geographical type of policy that you need to make sure you understand. So talk to your insurance agent about earthquake. Finally, we're going to talk about number 6, which is umbrella insurance. Umbrella insurance is often purchased in increments of $1 million. It's a lot of zeros. What does this mean? Well, traditionally, there's some misconceptions about what umbrella insurance actually does. A lot of people believe that if something is not covered in my other insurance policies, that the umbrella insurance will pick it up. That's not the case. So the very first thing I want to talk about and make sure you understand is that exclusions are outside the actual umbrella coverage itself. So if something is excluded on one of your policies, more likely than not, that umbrella insurance is not going to pick it up. It's not extending coverage. That's not what it's for. What it is for is to cover policies that have, if you have problems in the world of insurance and the policy covers it, then the umbrella insurance sits there over top of the limits that you have for those policies to make sure that there's enough coverage for you if you go outside of the limits that you purchased. So it's sort of like extra protection rather than extending protection beyond what you've already purchased. So what goes underneath an umbrella insurance policy? Things like auto liability, things like our cyber liability that we talked about earlier, things like our general liability, which many of you already have and understand. That's a slip, trip, and fall sort of issues and, things that you can be sued for. So there's lots of things that can go underneath the umbrella. The other thing that's outside of the umbrella that I need you to really understand is that property is outside of the umbrella. You cannot, if you don't have enough coverage on your building, an umbrella insurance policy is not gonna help you pay for it if you don't have enough insurance on it, okay? So understand that exclusions for liability and property coverage is often outside of the umbrella policy itself. But all the other things in here are. And so what does it actually do for you? Well, typically, let's talk about auto insurance because it's understood by everybody, even if you're not in the small business world. Auto insurance has a limit of liability. There's maybe $1 million that will be coverable if you have an accident. Well, what happens if you caused a multi-vehicle accident and several vehicles were damaged and several people were hurt and there was just a lot of different liability exposures and it went more, it's gonna cost you more to defend yourself and to pay settlements because of a problem that you had or one of your employees had. That is where umbrella insurance comes into play. So I like to think of umbrella insurance as asset protection. So if you have a net worth as a company of a certain amount, I would try to have an umbrella policy that is at least of that amount or more. So that if someone were to sue you and they're suing you because, they say, hey, you make a lot of money and I'm gonna sue you because I know you make a lot of money. What they don't know is you got a big umbrella policy here that will help you defend yourself, help pay for attorneys, and help extend the liability coverage of the underlying policies that are here so that, if you have a problem that you don't have enough insurance for, it's gonna be picked up by the umbrella insurance policy in general. So that is a quick overview of the 6 most overlooked insurance policies that small businesses need. I hope you found this helpful. If you have any questions at all or want to talk specifically about one of these, please reach out, drop a message below. Again, if you need help with your state laws or state regs, I'm happy to send that to you as well. Thanks so much for watching.